Welcome to the Digital Agency Growth Podcast. I'm your host, Dan Englander.
So today on the show, I'm very excited to welcome back friend of the show, if I could be so bold, Nick Petroski. Nick, welcome back.
Thanks so much for having me. It's always great seeing you. It's always great hanging out.
Yeah, man, for sure. And I love talking to you because you have your finger on the pulse. You actually are creating this research and this data within the agency space, in the tech space. There's a lot of people, probably including me sometimes, that are like just kind of like putting our finger into the wind and like figuring out what's going on. And you're actually like have something approaching like a randomized control trial, or at least data on a lot of these things.
Something close to it, right?
Yeah. Or you know, the bar is low anyway. So even if it's not up to like a, you know, an NIH level randomized control trial, it's still better than everyone else. One-eyed man in the land of the blind kind of thing. So with that, would you mind giving everybody a quick background on what you're up to and your history?
Yeah, for sure. So I got into this space about a decade ago now, which feels weird to say, but it's been a long time. I started out doing just general research for digital agencies, and that snowballed. And because nobody was doing it, that snowballed into more agencies saying, hey, can you tell me what an average profit margin is? Am I good? Am I bad? Like, we're growing at this rate. Is that good? Is it bad? And so we got a lot of those questions. And what that turned into was us noticing patterns. Like, we started to realize, okay, if agencies do this, this, and this, they're growing faster. If they do this, this, and this, they're earning higher margins. And so what we've done over the last decade is package all of that kind of pattern matching together into consulting for digital agencies, where we say, hey, you have this idea of what you want to be, and this is the shape of an agency that could get there. Like, this is what typically that agency looks like that gets to that spot. These are the motions that they go through. These are the processes they have, the strategies that they employ, and match it all together and then package it and make something that works. That's usually pretty damn effective.
Yeah, that makes sense. There's a few jumping off points there. I think one that I'm curious about is what have you seen in terms of like the total addressable market of, let's say, the boutique agency space? I'm not sure what defines a boutique agency, but, you know, less than 200 employees, like not the giant holding companies and that kind of thing.
You know what? The market is so skewed towards smaller shops that if you cut off like 250 and above, 250 employees and above, you still have like 98% of the market.
Yeah.
So segmenting that out isn't too hard. We have seen the market grow over the last 5 to actually 7 years now, since we started tracking it. And it was interesting because back in 2018 was when I think we did our first actual market check, where we went out and counted all of the digital agencies we could find and then put a size on them, as far as like employees. And then we also looked at service mix and pricing and all this kind of stuff. And back then, the average agency skewed even smaller. It was something like 90, well, I'm going to misspeak, but mid 90 percentile was below 50 employees. Like, it was tiny. And what we've seen over time is that segment that is like the 1 to 10 employee cohort, that has shrunk a little bit as a percent of the overall industry. So agencies are getting a little bit bigger. They're maturing a little bit, and they're moving into like higher cohorts that are taking up more space.
Yeah. What do you think is behind that?
I think it's hard to run a shop with 9 employees. I think it's really tough. You're in that space where the owner / partners are still doing a little bit of everything. Like, you're not fully divorced from production or delivery. You're not fully divorced from sales. I mean, you never are, but like RevGen is still on your plate very significantly. You're probably doing a lot of HR and payroll and accounts payable and accounting and accounts receivable. You're doing so much that kind of boom bust roller coaster of that size agency, where you're doing really well in sales, because you're still involved in production. You have to step back from sales and RevGen and deliver the production. And then, our pipeline's really, really looking gross. let's jump right back into RevGen mode and save the industry and do this kind of heroic sales motion. That's exhausting. And so I think that there was there's a realization there after you do that for a few years where you're like, okay, I either got to get bigger or I got to get out. And so either you sell out and there's some market consolidation, which we are seeing in the space now, or you're just like, okay, I need to get into that. I need new challenges. I need to get into that 25 employee space where it's not easy, but it's a different kind of hard.
Right. That makes sense. This is a metaphor that might fall flat, but it's almost like you have like this weight, you have like this, you're like looking at a building where the bottom of the foundation is small, but everything above it's big. So it's just kind of like teetering around and might fall over. Yeah. Or you set up the foundation at the bottom and get bigger, basically.
Yeah. Think of that Atlas statue holding up the world. Like that's the partners at a 9-person agency.
Yeah, that makes sense. I think so. I guess one question I always want to get into is kind of the what are you seeing now sort of question. I think when we last spoke, I want to say we recorded this like November 2024, so about 6 months ago. We went through how 2023 was kind of this reckoning year. Can you take us from like 2023 till today, and then what you're seeing in the first half of 2025, basically?
Yeah, 23 was rough. 23 was that year where people, agency leaders, realized how challenging this was. They realized like budgets weren't coming back anytime soon. 24 was a stabilization. So you had this rough 23, you had a not great 22, a rough 23. 24 was this like area where the bottom stopped falling out of everything for most agencies. And you had this space where sales kind of stabilized. It was low, but it stabilized. There was still growth for many agencies. And you had this kind of right sizing of a lot of shops, right? Like I just mentioned that the average agency is moving up a size cohort, or it's getting a little bit bigger, and look at the market as a whole. That is a little different than what we saw in our survey work, where we saw agencies kind of flat, if not a little bit lower on the actual number of employees. So even if they moved up a size cohort over the last 7 years, last year in 2024, there was a little bit of a decline in the average number of employees. Not enough to drop them out of a size cohort, but enough to show up in the data.
Yeah. And it's what I've noticed is that just in terms of what's fashionable, and I think this doesn't get talked about enough, but in business, there are things that are fashionable, just like in consumer. And there's a lot of, I remember like the early years of our business, we talked to agencies and it was fashionable to grow in terms of headcount. That was how people would brag. Yeah. And I think maybe the opposite is true, or at least it's neutral. At least it's not like a positive thing to grow. But what are you seeing, and how's that affecting how things are playing out?
I think I think that is correct. That's similar to what I'm seeing. And I think it's due to maybe a push from this AI thing. Like if you say to your agency buddies, hey, we're doing more with less. We're more efficient. We're more effective. We're integrating AI. We're doing it. Regardless of the truth. Like that's, what is it? 2 years ago, maybe? Start of last year, we saw a bunch of layoffs from the big tech companies, and it was like quiet layoffs though. They were like, we're seeing this potential for AI. We're just not going to backfill any new hires. We're maybe not gonna hire devs at this point, or entry level devs. Like you have some of that bravado that creeps in where they're talking about like, we're super efficient and we're actually doing this thing that we're realizing the promise of AI. And what we've seen in the survey data is that the integration of AI has actually kind of declined a little bit. Like it was so overhyped, and everybody knew it at the time, but you didn't know how overhyped it was. And it turns out it was very overhyped. It wasn't ready for prime time. And a lot of agency leaders saw that last year, and they were like, oh, we gotta do something about this, because we're taking effort away from RevGen and away from good processes to experiment in the AI space and try to like shove that in and make that work. And it didn't work as well as it was supposed to, or it could have.
Yeah, and to me, it feels like a very typical hype cycle, right? Where it hits like a certain bottleneck, and then it rises, or in a more kind of like rational, organic way. I think tied to that is like, what are you seeing? How many agencies are you typically seeing, that not specifically the number, but the agencies that are integrating it well? In what ways are you seeing it play out?
It's a lot. It's really tied to the maturity of the tools, like content creation, writing, that kind of stuff. That's been on the table for 5 years now, 4 years now, something like that. So those tools are a little more mature, and because they're more mature, they're easier for agencies to integrate. And we just actually wrapped up a pulse check survey where we went out and said, hey, how you feeling about the second half of this year? How are you feeling about pipelines? How do those compare? What services are in demand? What services are kind of lagging? The lagging services are all content creation. It's all social media marketing. It's social media posting, that kind of stuff that has been taken away, essentially. It's been commoditized for a while now, but AI is really kind of pushing that out. And shops are seeing it. So the integration of AI and where they're actually using it is really tied to how good the tools are at the individual task.
Right. That makes sense. So this is, starting to create, whether it's the AI itself or the perceptions of AI, it sounds like this has created layoffs, and maybe that was market, maybe those other forces too.
Yeah, it's not hitting layoffs yet. Like, we're not at that point yet, but we are at a point where some of the commentary from that pulse check survey, some agencies are prepping for them. They're getting ready in case the U.S. economy falters. It doesn't look great right now. And if it does turn worse, they're at a spot where they're like, okay, we saw this 3 years ago, 4 years ago, where we didn't react maybe as fast as we should. So now we're prepping and making sure that we can react very quickly.
Right. And when I say layoffs, I guess I make kind of like macro, like if we're also looking at the tech industry and that kind of thing.
Mm-hmm.
We talked about overall ups and downs of the agency world. What does the labor market look like for agencies now for hiring talent, and how have you seen that change recently?
Yeah, that's a great question. I was actually just on another call, I guess. LinkedIn Live, is that a podcast? I don't know if that's a thing. I was on a LinkedIn Live with a recruiting firm that works with a lot of agencies, and we were talking about this the whole time. The hiring market is just frozen for many shops. Senior talent here and there is still getting picked up. A COO might be the hardest thing to hire for at an agency, and that we're still seeing movement there. But at the entry level end and even at the mid level end, completely frozen.
Yeah. Why?
Sales suck. Pipelines are garbage. Like it's just not. Sorry, pipelines aren't garbage. We just did a survey. They're fine. They're a little weaker than usual, but they're not robust. And if you don't have confidence in the macro economy, and you don't have confidence in your own sales pipeline, like supreme confidence in it, you're not going to hire. You're not gonna staff up. We've seen this shift over the last year where there have been a ton more contractors being used by digital agencies as a percentage of their overall production force. So that gives them flexibility. If you don't have confidence in that pipeline or the economy, you want flexibility, and you say, okay, we can ramp up with contractors, or we can ramp them down. And it's a lot easier than layoffs.
Yeah, let's dig into the contractor angle. We hear a lot about fractional XYZ.
Mm-hmm.
I guess what from your experience and from the data do you feel like is feasible from a fractional perspective? What are the roles that work or don't work? Thinking about somebody that's doing this with a handful of clients, let's say.
Yeah, that's a good question. It feels like a lot of production is able to be augmented by contractors. So from a dev like task standpoint, you still want some senior devs. You still want them overseeing stuff. You still want them running point that are internal, that have that kind of institutional knowledge that actually makes your agency good. Same thing with marketing. You still want marketers in-house that are more senior, that can spot stuff quickly if they need to change course or react or something. But a lot of the mid-level and a lot of the entry-level stuff, entry-level is kind of being handled a lot by AI in certain respects, in that content marketing space, obviously.
Yeah.
But that mid-level stuff, we're seeing contractor use go pretty significantly. And it's like, if you try to look at it by task, what you do, it's really varied. There's a lot of stuff you can handle through contractors. And if you think about, like, the fractional term is used more in that C-level, like fractional sales,
Right.
fractional CMO, fractional COO, that kind of stuff. I think that works to an extent, but you kind of need almost an off-ramp from that eventually. Like, you don't want a fractional COO when you're 250 employees.
Yeah, and it's interesting because we didn't call ourselves this, but we were essentially, based on what we were doing in the investment, fractional BDR, fractional prospecting, and that kind of thing. And what we tended to see is that when we made our clients successful, it didn't always make them stronger, right? Because if there were ups and downs in the market, if there were changes on their end, if there were variables, and then something stopped working and we needed to fix it, the agency wasn't building institutional knowledge, right? So if we went in a different direction or whatever, they weren't internalizing that stuff. So that was like one of the big things that inspired us to go the training, coaching, showing people how to do things route. Wasn't doing it for them.
No, that makes perfect sense. I could totally see like you already said it. You're building a stronger agency by teaching them how to fish.
Yeah, and I don't doubt that there are plenty of things that you can completely outsource. Like, I'm sure that payroll, like, you would never do your own payroll. You're getting a Gusto or something. But generating revenue, right? And like that's a pretty core function. It's like outsourced breathing or something. Like, this guy's breathe for me over here, right?
Yes.
So that makes sense. So it seems like what's creating this hiring freeze is either AI directly taking it over, or the perception, and correct me if you disagree, that like things are going to change. And if you think things are going to change, it's almost rational just to stand still for as long as you possibly can until it becomes a liability. How do you feel that? Yeah.
But I'd reframe it. I think it's not knowing if things are going to change. It's uncertainty.
Yeah.
It's not a confidence that the world's going to be different. Because if you are confident in that, you're going to make plays to succeed in that new environment, or what you perceive the new environment's going to be. We're not necessarily seeing that. We're seeing a lot of, trepidation. We're seeing a lot of hesitation. We're seeing a lot of they're based on which industry gets tariffed tomorrow. We're seeing agencies that specialize in certain industries pull back a little and go, I don't know if I can commit to really going after this hard, because maybe that disappears. Maybe the business there dries up for another 6 months or something like that, and you can't afford that.
Yeah. What's interesting is like this sort of way of thinking, you have to do it. You have to kind of know what's going on. But there's something that I always find like that I don't like about it, because it feels like day trading a little bit. And if you're just moving around liquid money, that's fine. You can day trade. But if you have team structure, institutional knowledge, it's really hard. We had our group call with our outreach advisory with a couple agency owners. Both of them were serving B2B tech in different ways, and they were kind of talking about what we're talking about now, like the ups and downs. And they're like, oh, it was great to focus on software during these years because there was interest rates were low, and then it got bad, and then we had to focus on this other niche, and then it became really hard, and then it became easy with this other thing. And I was sort of just like, what I said to them was, there's no good niche. Like, the agencies that have become, like, one of them talked about a friend who'd built, if you're listening, this is somebody I'm very friendly with and is doing really well in the group, but it's the same story we've heard a million times. this so-and-so has been super successful and they focused on this area and then they made all the millions of dollars. It happened to be with like rehab clinics. And I was like, that was not a perfect niche at all. Like there's so much regulatory crap and just insane business owners and all sorts of craziness that pretty much every like success story you hear is because the agency just like outlasted everyone else and was willing to like go through this crazy storm. Right. So it's like at some point, I'm sort of just like, you've got to just like withstand the storm and stick it out with one of these verticals. Yeah.
I totally agree with that. There's something we talked about where if you go looking for the easy route, you go looking for the path of least resistance, you're not going to be the only agency to find it. We just counted the number of agencies. There are over 179,000 worldwide. Everything is being tried. So what you have to do is you have to get to that point where it gets frustrating. What is that point of hard? What is that blocking point that is a filter that filtered out all of the agencies that were looking for the easy route, that they're like, oh man, I'm not pushing through. I'm not doing an RFP. I don't want to go through 10 sales calls with a buying committee of 7 people. I don't want to do all that. Great. That's where something of value is. That's where you can, if you push through that and you figure out how to operationalize that internally, that's money, that's growth, that's everything.
Right. And I think that it's a lot of kind of like lane switching at the grocery store. Like one lane's moving a little faster, you jump to that lane. Maybe you do that once, you do it like 4 times in a row and you're getting home 2 hours later.
Yeah, exactly. Yeah, for sure.
Yeah, that makes a lot of sense. Kind of a sidebar. So when I talk about GLP-1s, Ozempic, that kind of thing, I think that there's worlds where that's everything people are talking about. I think if you're running a healthcare agency or you're, related to healthcare, it's everything. I feel like I'm not hearing enough about it and it's not coming up enough as much as it should in my world, which is like the agency world. When I think you could have a much bigger impact than AI could, at least in the next couple of years. And the articles I'm reading, if you're new to this, and I'm not by no means an expert, is like, it's not just people speculating. There's major private equity organizations and developers that are like making changes to 5-year plans based on this, because we might have 30% of the population that's like 50% less impulsive. That's not going to buy that cheeseburger or buy that glass of wine or whatever. So
the alcohol one is the one I just saw. It cuts drinking by like to 1/5 of what a normal person is.
Right.
Like that's a big shift for your downtown. What is your downtown anchored by? Restaurants and bars.
Yeah.
Like I don't know. That's a humongous shift.
Right. And I think there's a great article by a guy named Todd Gagney, who we'll probably have on the show before long. He's a VC, but he was looking at the research and basically making the point that like, we're not paying enough attention to the second and third order effects of this. Cause we're like, great, people lose weight, maybe they drink a little bit less, but it's like, well, what does that mean when like when you're not clicking on that Instagram ad as much? What does that mean when you're not,
does it translate outside of like food or drink?
I don't know yet. I think it's also new. It might not, right? It might not have the effect we think it does, but it seems like it could. And it seems like there's major industries that are making changes to anticipate it, which is something to pay attention to at least. Yeah.
That's fascinating. Can you share that article?
Yeah, I'll
I'd be super interested in it.
Yeah, I'll try to link it for everybody else who's interested as well. Cool. So where to go from here? I know that you have a new report out and would love to hear kind of like what that focuses on and some of the changes you're seeing beyond.
Yeah, absolutely. Yeah. We do a landscape overview every year, and I'm not going to commit to this, but we're probably updating it twice a year now because everything's changing so quickly. We just released the 2025 version, and it really covers everything metric wise and benchmarking wise and structural shifts in the industry that we're seeing at a high level. And it's completely free. It's right on our website, prometheanresearch.com. There's a banner at the top. You click on that, you get right to it. But basically the takeaways from that are there are a lot of kind of like 3 core structural shifts that we've seen and trends that we've seen that are probably going to have a pretty significant impact. Like I try to filter out the nonsense. I try to filter out all the other stuff that they're like, oh, look at this trend, and it impacts 10% of the industry. Who cares? Number one is obviously AI. What we saw is what we talked about earlier, where they're not as advanced. Then agencies aren't integrating it as deeply or as much or getting as enough out of it as we thought they would at the beginning, maybe 3 years ago. So that's the number one thing, which the takeaway from that isn't AI sucks, don't use it. It's there's a lot of room to run in that AI stuff. There's a lot more to squeeze out of that. Second one is really specialization. Like it's here. And again, we talked a little bit about that already, but that's something where shops, you can't just pick an industry. You can't just pick a service and go, I'm going to serve these like 75,000 potential prospects in this industry. And I say I do everything for manufacturing. You have to be a ball bearing expert at this point. A guy messaged me yesterday. He's like, I was a podiatrist. I started a marketing agency because I was doing marketing for my podiatry clinic. And now I help other podiatrists market their stuff. And that is the level of industry knowledge that your competitors are coming to the table with.
Exactly. I'm glad you brought that up because this is one of the most common topics we talk about. And I think we probably don't talk about it enough because it's the thing that agencies struggle with more than anything else is like really the what and the how specialization. How long am I spending on this? How do I know if it's working? Right. Like, because it's such small sample sizes that we all have based on happy clients, unhappy client, whatever it is. And I'm glad you brought that up. Like the example of a podiatrist. That was our background too, because I came from the agency space. And I think there's an element of that where it's like, it's really tempting to look at what's growing and look at what's hot, but opportunities, they're like pairs of pants. Like pants are, abundant, but not all of them are going to fit you, right?
I love that analogy.
Yeah, it's not perfect. Give it a C+. But they can't all be zingers, right? So I'm trying to bring this to a question, I guess, like if you're an agency, you're being told by consultants like us annoyingly every 5 seconds to specialize. The agencies that are pulling it off, like, how did they pull it off? How long did it take? Like, what are the commonalities?
Yeah. Fantastic. I love getting a little deeper into this because you're right. Everybody does just say specialize, and then they fly off and say, my job here is done.
Right.
That's not how this works. We talked a bit about institutional knowledge already. And if you have institutional knowledge on an industry within your team, that is the first spot to look. If you know more or know something interesting about a subsector that other agencies don't, and you can speak their language, that is the spot to start looking. If you don't have that, and a lot of shops don't, I have recommended for years now to hire from within industry. Bring on, like, salespeople are fantastic for this. Because if you can bring a salesperson on from an industry to an agency, they already know the ins and outs of it. They've been in the trenches. They know what objections are. They know what their own objections would have been. Like, it's stupid easy for them to pick apart what is missing from that space and help you build a value prop to solve it. Beyond that, anybody in operations, people in marketing, like higher ups in marketing that have seen this, that have worked with a number of agencies, that are hired and fired agencies, they can bring knowledge to your shop that it's hard to get anywhere else. So a lot of times you see that pipeline of like expert at an agency going to industry. I really like to see that pipeline go the other way as well.
Right. There's a couple of interesting things about what you're saying about institutional knowledge. I think the first is like, I've brought that up with clients sometimes, and they'll have this deep institutional knowledge on a particular industry. Let's say it's like, hey, I'm on your site, like all of your clients are banking clients. And they're like, well, we don't want to focus on banking. I'm just making this up as an example, like, because the sales cycles are long, or there's this issue, or maybe the industry's doing this, or it's shrinking a little.
Where's that filter? They're hitting that hard filter.
that's what that is the reverse Dunning-Kruger. You know, Dunning-Kruger effect,
Yes.
right? Because it's like Dunning. For those that don't know, Dunning-Kruger is the less that you know about something, the more confident you are about it that it's going to work. So what happens is the people that know the most are the least confident because they know where all the bodies are buried. Right?
Yes.
They know all the problems, and they're like, they don't want to do it. They don't want to focus on banking. It's like, but ironically, like you're the most equipped to eat this shit sandwich because no one else will.
100%.
Yeah.
Yeah. No, I love that. Yeah, absolutely.
It is, yeah. So then they're like, well, let's go after e-commerce. Like e-commerce is growing.
Mhm.
It's like, great. So get in line with the
Greener. Like
Right.
if you know,
great.
like you just said, if you don't know where the bodies are buried and you don't know where the pitfalls are, you just kind of ignore them. You're like, it can't be that bad.
Yeah.
And the e-commerce guy over there is going, this sucks. Get me into banking.
Really sucks. And the funny thing is, like, I'm prone to this too. Like, I'll have whatever bad day, pipeline's going low, and like got off a rough sales call, whatever it is. And I'm like, oh man, the agency business sucks. Everybody thinks that here are the bodies that are buried in the agency space.
Yeah.
Everybody thinks they're a genius, right? It's a service business, so it's not like there's massive amounts of cash flowing through it at all times. There's always a grass is always greener, but ultimately, I'm like, you know what? It's fine. It's, you know, is it AI? Is it booming? No, but I'm not going to compete there anyway. I'm not that smart. I'm not going to outcompete like, you know, somebody that went to Stanford and like so it's fine. If I was in the newspaper business, that would be a problem. It's shrinking. Like this is
For sure.
it's good enough. So anyway, I took us off course a little. You're talking about the shifts. AI, number one. Specialization. Any other thoughts on specialization before going on to the third?
I mean, a lot, but nothing to cover in 10 minutes.
Sure. Fair enough. The third then. Yeah.
Oh, the third thing is, and we talked about it a little bit, is that contractor usage. Like it is really changing the structure and the goals of a lot of shops. And it was weird because I saw it a few years ago. Probably it was after 21 because 21 was the boom year. And then probably 22 things got a little got a little gross. So probably 23 is when we started seeing really large agencies that had done sizable layoffs when they've gone from like 500 to 100 employees. They staffed up pretty strong with contractors. If they had 100 employees, they probably had another 150, 200 contractors in regular usage, like that were on the team, that were on the bench. And at the time I was like, yeah, that's solid. You're going to sacrifice a little margin, but you're maintaining flexibility. And we didn't know what the market was going to do at that time. So if the market comes back and sales ramp up, you're going to be able to capture that upside more quickly than somebody that just has 100 employees and no contractor bench.
Yeah.
What I didn't see coming was that model working for someone with 15 employees, working with 20 employees. Like now we're seeing these really much smaller agencies maintain contractor benches where that agency a few years ago would have been in the 50 to 75 employee range. And now they're in 25 to 30 employees, like full-time employees, when they're able to do the work of a 50 to 75 employee company because they're augmenting with contractors.
Yeah, that makes sense. And that seems like a trend that wasn't going to go back the other way super fast. But
I think it's based on sales.
Yeah.
I think it's based on that uncertainty in sales. So if you have, if something shifts economically, macro, in the next whatever, and agency leaders are suddenly very confident in their sales pipelines, it is typically cheaper to have a full-time employee than it is to maintain a contractor.
Mm-hmm. Mm-hmm.
So I could see that shifting back when the market turns again, but I don't know if it does it 100%.
Right. That makes sense. I'm not sure whether or not you have insight into this from the data, but do you have any sense of what the labor market wants? Like, do you see people being happy as contractors? Do you see people not being happy and wanting the cushy W-2 job still, or how is that playing out?
From what I've seen, there's like a shaking in the confidence of the stability of what a W-2 is. Like we've gone through in the tech space, and agencies are tech adjacent. We've gone through years now of instability and layoffs, and from the startups all the way to the big guys. And what used to be seen as stability in a W-2 position has been pretty strongly shaken. So if an individual can pick up contractor work and they know that contract lasts X amount of time, X amount of months, they know that that's relatively stable.
Right. Yeah, and that is a major reckoning. Is like, if that's not stable, then we're all falling out of a plate.
Yeah. I don't want to say that they like it. I don't think that this is like the preferred situation. I think everybody on the labor side liked it a lot better in 2021 when people were throwing like 40% salary bumps at them to switch jobs.
Yeah,
like that's much more interesting from an employee's perspective. But I think it's the new reality, so they've kind of come to terms with it, and they're acting accordingly.
Yeah, that makes sense. Nick, this is always fun, and I always learn so much. I know you mentioned it a second ago, but where can people go again to pick up the report? And
head over PrometheanResearch.com. That's our website. It's linked right at the top. You'll get right to it and can't miss it.
Awesome, man. Let's do it again, and there's always stuff to talk about, so appreciate it.
Sure. Thanks so much for having me. It's always great talking to you.
Yeah, likewise.